Hello, 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 everybody. What's up? I woke up at 4:30 in the morning and I ran 7 miles today. I'm building myself up to 10 miles. 7 miles is a lot for me. It's the most I've ever run in one shot. I'm going to be 60 years old in April, and I work out 6 days of the week at the gym. I always wake up at 4:30 in the morning. I go to the gym, and now on Fridays I run. So 7 miles today. And one of the reasons I like physical exercise, not simply because, it's good for you, but also you can push yourself. There's a mental game aspect in it. You always have one more repetition in you. You always have another mile that you can do. I started out running a mile, then I went to 2, then 3, then 4. Now I'm up to 7. I'm going to go to 10. So it helps with my mental game. When you feel that resistance, when you feel like you can't push anymore, you can. You always can. You always have a reserve in you, and that's a very important aspect in mental game. Okay, whether that means in the context of trading, you wait a little bit longer, all right, or you have a detachment, right? When something I talked about that yesterday. When you get out of a position and you have a profit, you congratulate yourself, and if it keeps on going, you don't kick yourself, you don't berate yourself, you don't put yourself down. You were successful in what you set out to do, which is profit in the market as a trader. All right, so I mean, it all factors in. Let me talk. Last night, I sent out a bunch of emails to MMT Trader subscribers. Important emails, I think. A couple of them dealt with the fiscal flows. And then there was emails that I sent out with regard to what's happening in the oil markets. And by the way, if you want these emails, if you're not a subscriber to MMT Trader, just go to my website, pitbulleconomics.com, and you'll see right there on the homepage, it says get the 30-day free trial. You get that, you got access. I'll send you the report. You have access to all the back issues, and I will send you those emails that I sent out yesterday. But just to distill it down, basically, we have seen in the last week the fiscal flows flip very negative year over year. Okay, they've been running positive and growing positive since December 28th. And that is something that I did not see coming back in up until mid-December. But we flipped positive, and a lot of that had to do with Medicare. You may recall that back in October, November, I was pointing out how Medicare, due to the budget agreement that they made last September, there were cuts to Medicare, and that put us down year over year. And Medicare is like the second biggest spending item on the federal government's budget. All right, so it's enormous. So that $20 billion year over year drop in Medicare spending, that was a fiscal drag. It brought us down, but that's been narrowing the gap. It's almost even year over year. So that improvement led to a flipping positive in the fiscal flows. Now, I fully expected the flows to go negative for the simple reason that the IRS has been withholding tax refunds this month based on a law that Congress enacted in 2015, and the law is designed to prevent tax fraud and identity fraud. So certain tax refunds they were holding, and that hold period was lifted on February 15th. So yesterday in the daily Treasury statement, we got the data for February 15th. I expected to see a big jump up in the tax refunds. There was a jump up, but it was nowhere near sufficient to close the gap. Now that might ameliorate itself over the course of the next several weeks, and I'm guessing that it will. But for the moment, we are in a big negative in the fiscal flows versus last year. Now, why is that important? I mean, that is impacting people. People are depending on those tax refunds. And just some anecdotal evidence, and if any of you have some to add here, I had a guy email me saying that his firm, they're seeing the slowdown in sales. It's hitting them. So that's a factor. Stock market's down today. By the way, just pointing out, it's always fascinating to me because, doing these videos and getting certain emails, they're almost like a contrarian indicator. when people were all gleeful the other day about the stock market rally, and they're using very descriptive adjectives to talk about it, that always is a sign to me. And just like I remember back in November, I got so many emails from people about what's happening to gold, it's crashing. I had one email from a guy who I guess reads my stuff on thestreet.com, a really nasty and insulting email about, how I'm such an idiot and so arrogant and such a jerk, and I got this one wrong and everything. And I knew, when that crescendo of comments or emails comes, it is a fantastic contrarian indicator. I had a lot of gleeful comments here about the stock market. We'll see. That's all that I could say. With regard to oil, if we are in an inflationary environment, commodities are going to do well, and that is going to include oil, even if the fundamentals particularly might not be that bullish, because you are going to have the zombie portfolio flows. You're going to have the asset managers who now say, oh, I got to buy some oil because we are in a positive price environment vis-a-vis commodities and inflation. I got to buy some oil. So these portfolio flows, while they're not really based on anything fundamental, it's just, boom, a light goes off in these guys' heads way after the fact that they should have been buying, like, months ago. A light goes off in their heads. We got to own this stuff. So you could actually have negative fundamentals. We have this huge inventory overhang now, right? We have record inventory in crude. We have record inventory in gasoline. We have near record inventory in distillates. Just came off a smidgen from what was record inventory. We have imports, still decent, I should say, but they fell last week, reversing almost the prior week's increase. We have exports that fell. And most important, we have refiner inputs. I've been talking about that have gone down. And most importantly, if you look at gasoline demand, if you take the 4-week average of gasoline demand, that is now down 8.5% year over year. We have not seen a decline like that in 16 years. 16 years. I mean, you don't see declines in gasoline demand. They're very rare. Very rare. Gasoline demand goes up almost every year. So oil market's coming off, as I predicted, as I talked about. We got about a 3% decline in gasoline today. I don't know how much it's going to go down, just because the inflation meme, right? This whole inflation theme. The asset managers, hey, I'm an asset manager. Yeah, I'm on Wall Street. They're idiots, right? The big boys. They're the big boys that some of you are so in love with, and you worship the big boys. I buy and I sell. I know how to play the big boys. They're late. They're always late to the game. You think you know the big boy. You don't know the big boys. I traded the money of a big boy, Paul Tudor Jones, Tudor Investment Corporation. I worked on at a major bank as a prop trader. Okay, I was a floor trader on 4 exchanges. I traded S&Ps on the floor of the Chicago Mercantile Exchange. I stood next to guys who did the business for Morgan Stanley and Goldman and Merrill Lynch at the time. Don't talk to me about the big boys. You don't know what you're talking about. Okay, they're idiots. They're clueless. I told you how Goldman makes money. They make money on the spread. They pad a profit into their deals for themselves. If you're talking about outright trading, Goldman, they suck. They're terrible, and all of them. They're terrible, the big boys. All right, I got off course there. But anyway, so I don't know how far oil is going to go down. The guys who if you have MMT Trader, you will know. I will tell you. I will write about it. We will follow it. But all I'm saying is that if we are in an inflationary environment, which we are, all right, sooner or later, the big boys, the light's going to go on in their head, and they're going to say, we got to buy oil. Meanwhile, I was buying it down at 31 and 39, okay? So we could push back up after this. We got to see what happens with, you got a big speculative long position in this market. You got to flush some of that out. Then we'll see what happens after that. All right, everybody. I'll see you later. Bye-bye.